Good morning, everybody. Welcome to the Flow Show, Tuesday, 20th of May. I hope you're doing well this fine and bright morning. Morning, Mr. K.
Morning, Ryan. Morning, everybody. How are we today, Ryan?
All good, all good. Sun's back out again, so can't complain. Can't complain. Right, I'm sure we'll find something to complain about during this next part, where we go through all the headlines. We're going to start off in China. And the moaning has begun already, as I say. China says that the US is already undermining the consensus reached in the Geneva talks, and that the US needs to correct its wrongdoings. So we're back to mudslinging on that front. They also cut their LPR rates as expected, following up all the other rate cuts that they did a week or so ago. So they're keeping that lot going. Japan is in focus at the moment. Lots going on in the yen, lots going on in Japan to do with yields. So we've had Nikkei saying that the Bank of Japan may keep its current JGB reduction plan through after the spring in 2026. And they said that the Bank of Japan is to hear market player opinions on JGB buying amounts. They have released a briefing that was used at its meeting with bond market participants. Some members said that the JGB market functionality is improving as a trend due to the BOJ's taper. Other participants said there is a distortion between super long yields and yields for other maturities due to dwindling liquidity in super long JGBs. Some other market opinions included those wanting a new taper plan to cover about 2 years, and others saying that they should lay out a 1-year plan, then maintain that taper level thereafter. Some were talking about their monthly bond buying amount, saying that at the end of the new taper period, it ranged from 0 to 1 to 2 trillion yen. And about 3 trillion yen as well. Some seek smaller cuts to current bond buying plan. Some seek larger cuts to plan. And some want an eventual end to all bond buying. So all these opinions coming out, which the BOJ are going to attempt to sift through and make a decision. Kay, lots of eyeballs on their next meeting, which is June, I think. As to what they may do with QT. Now, we're in a bit of a situation. We're seeing a lot of talk going in about these yields, how they're moving out. We've got demand issues. We've got supply issues. We've got yield level issues. The Bank of Japan are in a bit of a pickle, aren't they? Because they're still buying a lot of the market. So if they stop buying, someone's got to pick up the pieces, and that demand isn't there. Which means they've got to keep buying, which means that supply might not be there. Another rock and a hard place.
Yep, and for as long as the Japanese whales especially will not have made the decision that it's time to pile into the super long end, we may be in the same situation. Now, Bank of Japan is the concentration of buying of their JGBs has traditionally been, let's say, concentrated between the 1 and the 10 year. And when you go up to over the 10 year, up to the 25 year, it's been a third of what they buy only between the 5 and the 10s. And if you go into the super long, it's only like 10% or so. So there is from their side not going to be any help or much help unless the long term is really appealing now to the Japanese investors, and as we know, they have been tapering this amount now. I must recheck, but I think that the government itself, the funding, is rather concentrated anywhere between 0 and 10, with I think 3 to 5 or so. But I'm I may be mistaken, but it's not to do with the ultra long term where the government funds its deficits, right? They used to be longer term because the interest rates were rock bottom, but now I think they shortened the maturities there. But yeah, the market is doing a lot about those super long things. Yeah, worries about inflation, worries about a trade deal, worry about everything that's going on. Also, the rest of the yields are rising as well, but then the the Bank of Japan not standing in the way of those super loans right now is a bit of a worry. Yeah, they are between a rock and a hard place. I was even thinking this morning, Ueda is going to Canada for the G7, right? Um, could he have a Kuroda Davos moment and say over there that they will buy more bonds to quiet the market? Who will say he can't do it, right? It's usually not something typically Japanese, but we know with Kuroda that things can also change because he did announce QE over a Davos meeting back in, what was it, 15, 16 or so. Yeah, for the rest, yeah,
So what,
apart from the Bank of Japan stepping up to buy, which in turn could then tell the Japanese investors, okay, let's go in there as well, because they are now coming to very interesting levels. If the 20 is above 2.5, but if you look at the 30s and the 40s, you're above 3%, right?
let's have a quick look. Let's go on to 30. Yeah, well up. So what's the solution? And well, because if they start buying bonds and they're effectively going back into or increasing QE again, which is not what they want to be doing at this
Well,
point in time. If they raise rates, that adds to the interest rate on bonds naturally. And thirdly, so why are we seeing the yen strengthening on this news? Because if a lot of this is all domestic, like they're not getting the domestic demand to pick up from the Bank of Japan, domestic demand is net zero for the currency. So why are we seeing the currency strengthening on all this news at the moment?
Oh, I think the currency is a bit of a mixed picture. Because first of all, yeah, the dollar is a bit more on the defensive, and then yeah, those yields. I'm a reluctant buyer of yen just on the basis of those super long yields, to be honest, Ryan. I'd rather say it's probably um, the market may be expecting that at one stage the Japanese investors will perhaps sell some or rebalance between U.S. Treasuries and Japanese super long and JGBs. So that is probably one of the reasons why the yen is strengthening, as well as the potential of finding arrangements on the trade talks. Um, the solution to this, I think, is Bank of Japan, because they always left the door open to buy on an exceptional basis. Not re-adding QE. It is in the fact, of course, doing QE, but in the terminology, they can go
Financial
style
stability,
like.
yeah. Financial stability cause,
Yeah,
yeah.
financial stability, Bank of England style, the quarter trust moment. They can step in and say like, okay, we need to cool down markets here because there's something off kilter, and for, in a way, perhaps not completely justified that those yields, because they are really now explosive, right? Those super longs, but yeah, again, I'm reluctant to go to really buy yen on the basis of this, because if Ueda comes out in Canada and says like, oh yeah, we are going to buy like a non-scheduled, they call it non-scheduled, unscheduled JGB buying, your yen is probably going to weaken 1% as a reaction of it. But the solution, yeah, I think it's only unscheduled buying because none of them they gave the impression that they are stopping or reversing any of the tapering right now. Okay,
Yeah.
what there could be is if that if those yields in the 10-year, for instance, continue to rise as well, that they may he may step up and buy some more there as well, because you're trading at we're trading at 1.5%, which is the double of where their interest rates are, right? Coming of Japan interest rate. So could be that I think the only thing right now is unscheduled bond buying and calm the markets, show that they are there, that they are not going to let things derail either.
Yeah, but then I suppose the other side of that coin is you're admitting there's a problem, which then sort of paints a bit of a target on your back in that situation. But yeah, I'm getting a bit worried. Okay, don't listen too much to the market fear and the market screaming about problems. But this is Japan. It doesn't take much. They are facing a lot of crunch times at the moment. They're facing potential raising rates. They've got the trade stuff coming up, the deadline, the stuff with the US, and they've got the election coming in as well. So that June-July period could be a huge one for the yen. And yeah, at the moment, I don't know which way it's going to go, but it's definitely one thing we're going to have to keep a very close watch on. And speaking of what's going on in trade and whatnot, Japanese Economic Minister Akazawa said he held working level trade talks with the US in Washington yesterday. Finance Minister Kato said FX talks with Besant are to be based on market-driven rate understanding. And then he said that the previous bilateral meeting confirmed FX rates should be set by markets. Says Japan and the US are arranging ministerial trade talks for May 23rd. I don't know if this is right, and correct me if I'm wrong, Kate. I think maybe because we were talking about why they keep talking about FX. Isn't the Treasury report due out shortly? The currency report, is that April, May that it usually comes out, or am I off?
I thought it was. Is it biannual or is it annual? Is it annual?
I think it's biannual. So I think they do one now, one in September, October, or something like that. I can't remember. I'll have to look it up. But that just
I would have said June and December, but
whenever it is, it may be June, December. But that might be the reason why Japan and the finance minister wants to have these talks, just to make sure they don't get a poor report card in that report. I'll have to look up where the last one was and then work it out.
Actually, I mean, did we not have one not that long ago?
I can't remember. I'll have to look it up. I've probably got it stashed away in a file somewhere. But yeah, it was just a off the cuff thought I had that maybe that's the reason why they're banging on about it, so they don't get, as I say, a bad report in that paper. But anyway, we'll look at it later. But what else has come on the trade front, according to Kyoto News, is that Japan is potentially looking to accept the US tariff reduction and not an exemption. That's the red line that they are officially holding at the moment. That they don't want any, that they want an exemption rather than this 10% stuff. But Kyoto reporting that they may be happy with that. We'll see how that goes this week. Again, big on the trade front for Japan. Anyway, hopping across the water to the RBA, they've cut their rate to 3.85% as expected. The RBA statement said that global trade conflict is now a key downside risk, and that's linked to US tariff policy escalation. So global growth outlook has been downgraded and uncertainty has risen. They also slightly cut their domestic core inflation forecasts and also see slightly higher unemployment. Governor Bullock says price increases have slowed, and that's very good news. We did discuss a 25 or a 50 basis point cut. Said there was an argument for 50 basis points, but it was not the strongest argument in the room. The decision was a consensus decision. They discussed holding rates or cutting. And she said doesn't know if there will be a long series of cuts. So a bit of a dovish tilt to the meeting, just the fact that 50s were being discussed at all. I think reading through the bits and pieces, that was more likely to be if something were to happen type 50 basis point cut, something rolled over, or this trade stuff blew up, or their economy blew up. So it doesn't look like it's being discussed in terms of just a normal policy move, more of an emergency policy move. But it's still a dovish slanting RBAK, and they were, or still are, one of the banks that have got the highest rates amongst their counterparts. So it's natural that they're going to look to bring them down, mate.
For Bullock's standard, that was a very dovish report.
Yeah.
Yeah, because she did speak about risks, and I think she mentioned it twice, that there had been a discussion between 25 and 50. So for Bullock standards, it's a dovish report. On the other hand, they are looking at risks like everybody else. Inflation, she finds it because I just heard a part of her press conference, and she did say that despite some pressures here and there, inflation continues to do nice things and go their way. So she sounded a lot less worried about it than she was during prior meetings. For the rest, it's just all the uncertainties that all the other central banks are facing. It's just the same thing at the RBA. So I guess the market took away the Bullock's usual hawkish stance, and here we are. For the rest, you trade. It looks as if we trade dollars again now. Yes, both, and actually both antipodians are on the weak side of things compared to the rest. But I don't think there's anything much more than what she said and the actual reaction on the back of it that we will need to take into account. That it looks to be a report saying that, well, she did say that she does not exclude any further cuts, and if needed, even accelerate. She did say that, but is that a reason enough to send the Aussie 1% lower? Or over 1% lower. I don't really think so. So we're somewhere back in the middle of the ballpark.
Yeah, absolutely. As usual, they got to cover all the bases. Aussie dollar hasn't really done an awful lot.
No.
On the back of that, there's a bigger move in Aussie Kiwi than there's been in Aussie versus US dollar anyway. What we have done though is once again failed up here at this 40.45 level. It's still proving to be elusive, getting a decent hold above there. The only time we've really done that was here, and that got us a move to 65. So that shows you what it's capable of if we can hold this level at some point, if it can manage it at all. Otherwise, we've had a pullback. It couldn't even get down to the figure. So, the market's not really bothered about the RBA on that side of things. But we'll look at those prices in more detail shortly. We've got S&B's Schlegel saying in certain months in 2025, inflation can be negative and the bank can tolerate negative CPI in the short term. Also said there's no alternative to US Treasuries. Bank of England's Dingra was explaining away her decision the other week, saying my vote for 50 pip cut was partly to make a statement on the direction of the economy. Well, she's been making that statement pretty much since she took the hot seat. Says we may see some cost pass through from US tariffs, but would argue that number would be quite small. BOE's Peel said the quarterly pace of 25 pip bank rate cuts seen since last summer is too rapid given the inflation outlook. So he's getting a bit more antsy over the inflation picture than others, hence why he's not in a rush to keep cutting rates. ECB's Muller says we can't rule out further interest rate cuts, but there needs to be clear reasons to cut significantly more. It's not obvious that we must significantly lower rates. So it's not closed to further cuts, but he's saying that he's not necessarily wanting a ton of further cuts to come. Fed's Bostic, he's shit his bed, got in a bit of a panic over what's gone on with the Moody's downgrade. He said the Moody's downgrade will cut across economics and financial markets. The downgrade will have implications for the cost of capital and could ripple through the economy. We have to wait and see about the impact of the downgrade on demand for US debt. The Fed will have to determine how the downgrade affects an outlook that is already in flux. It says it is unclear if consumers today can take on the full cost of tariffs given the state of household balance sheets and recent inflation. We'll have to wait 3 to 6 months to see how this uncertainty might settle. The number of rate cuts this year depends on how things turn out, and that the details of the tariffs will matter. He's leaning, he's leaning to only one cut this year because it will take time to understand tariffs. It says inflation expectations are moving in a troubling way. But we have not seen much movement on the job side. Firms say they don't have plans for large layoffs. It also says the decline in sentiment is not playing out in the marketplace, but there may be a point where the distance between sentiment and the data starts to narrow. So very bearish ears about this downgrade stuff. You raised a good point though, Kay, about how we might see this downgrade showing up early, and that'll be in the auctions. We had a 3 and 6 month auction yesterday, which I don't think went off without too many problems. We've got a 20-year tomorrow, a 4 and 8 week, and a 10-year tips on Thursday. Is there going to be extra focus on those auctions given the downgrade?
Yeah, I mean, if you look, for instance, how the 20-year in Japan went, I think there is going to be focus on the auctions, obviously, and I would argue, I mean, bills and stuff. There's so much funding and hedging and stuff in there. I'm not looking too deep into them, but if you start from, I would say the 2, 3, 5 years and onwards, there's going to be obviously focus on, especially surrounding everything that goes on, even on the back of ongoing trade negotiations, those rumors about the Chinese, our Japanese yen, our Japanese JGBs going high enough for the whales to start to repatriate money. Who knows? So you have, there is going to be focus on the auctions going forward. That is absolutely the case, Brian.
Yeah, and just for anyone who doesn't really know about this sort of stuff, if you're looking at these bond auctions, you mainly want to be looking at the yield side of things, what yield gets done at the auction, because if investors don't like the downgrade, they're going to want a higher yield to give the US their money as a bit of protection, shall we say, against the risks. So yeah, the demand side of things and who's taking it up is important, but whether there's any big movement in the yield at the auction is going to give us a clue as to whether this downgrade has affected things or not. Feds Williams says recent economic data has been very good. The labour market is pretty much in balance. First quarter growth was unusual, but that was on trade issues. Some forward-looking indicators are signalling concern. Trade is a particular point of uncertainty. Many firms and households are in wait-and-see mode, and the economy is likely to slow this year. Not getting as antsy as Bostic is. Feds Jefferson, the US could face a one-time increase in the price level from tariffs, but we must make sure it doesn't become a sustained increase in inflation. They will keep policy in a place to be sure inflation expectations remain anchored. Fed's cash and carry says currently there's big uncertainty in the economy. He says he doesn't know when the tariff landscape will settle out, but he feels very bullish that there will be lots of jobs in the future US economy. So he's a bit bullish on that one. VP Vance was talking before the Putin-Trump phone call, saying that if Russia is not willing to engage, eventually the US has to say this is not our war. Then we got the phone call between the two bigwigs. Putin was first out with his summary, shall we say, said that Russia is ready to work with Kiev on a memorandum on future peace talks. Says a ceasefire is possible once agreements are reached. It said that Trump said that Russia favors a peaceful resolution of the Ukraine crisis. Trump was out after that, saying that Russia and Ukraine are to immediately start negotiations towards a ceasefire, and that they are potentially going to be looking at a neutral place to do that. Could be the Vatican in Rome, because the Pope's put his hand up to offer to mediate talks or host the talks. Zelensky says he hopes a meeting will happen as soon as possible. In the meantime, lots of people in Europe are saying that Putin's dragging this war out or dragging out these peace talks while he's still making gains over there, and that he's in no rush to come to the table. We'll see where that all settles. Oof. Any thoughts on that, Kay?
Well, yeah, I mean, I wonder how the catering is at the Vatican now. Is it like a Michelin star chef over there? Seems like the new Pope wants to have a share of the pie, monetizing the Vatican meeting rooms. Yeah.
Is he? What's he going to do? Put in some vending machines or something? I don't know.
I don't know, mate. He said that Trump said that it may be held at the Vatican according to the Pope even. So I don't know.
Yeah.
But if you look at those talks, the Russia goes to the table on the basis that they are going to keep those 4 regions that they say that they are completely controlling. So is that not a non-starter from the beginning?
Yeah, possibly. It is dragging on.
Really.
Yeah, it is dragging on and on and on. And you got I mean, Trump hinted at it. He said he's got a red line for all this stuff, but he's not going to tell us it now. And I was thinking exactly the same thing over the last couple of days. How long are they going to give Putin to come to the table before they need to change tack and pull out or whatever? And I don't know what happens if that situation transpires. It probably won't be good for risk, but let's keep our fingers crossed that they can get some peace. Right, that's it for headline front. We have got a few bits and pieces going on today. As Ali points out, we've got Canada CPI. That's probably that's about the only thing we've got coming out today, apart from a couple of other Fed heads speaking later on. So what are we expecting for CPI? Quite a significant drop. CPI looking to come in at 1.6% from 2.3% previously, though some of the core measures sticking around where they have been. So it looks like we're getting all the moves in headline CPI rather than the core. Keep an eye on this Bank of Canada core number prior at 2.2%. If that comes down a chunk, then that's going to change expectations for the Bank of Canada, and whether they are going to cut again or continue cutting or start up cutting again, whatever. Kay, you got any thoughts on this CPI data? Does it even matter? And in this trade situation, tariff situation, are those expectations a little bit on too far to the downside?
Yeah, I was just thinking about that. It's an April report, right? And we know, although we know about the Liberation Day announcements and the fights, but I don't know. Are those numbers going to be a little distorted also with those elections, Carney? And I really don't know how to even read this report. Just in short, I'm not planning to do much with the Canadian dollar because we are below that unless we break like above 140, 15.25 or or back below 138.90 figure or so. But I'm personally not having a lot of appetite to start trading this, because as you say, does it really matter that much in the current context of everything that's going on? Remains to be seen, right?
Yeah, absolutely, absolutely. So Ali's asking, what will be the reaction? Is it time to break 140? Well, who knows, mate? If we knew that, then I wouldn't be sitting here now. I think you've got to look at it, as we've been saying, from the point of view, we've come through CPR reports, we've come through other bits and pieces. What is going to matter? If it's a big variation, if it's hotter than expected, then you're probably going to see the CAD gaining as the market reduces rate cut expectations. That could well mean we get a move down to the 139 level. But bear in mind, depending on that variation, the old CAD, the old loonie, can be a bit volatile. So we can get bigger moves in dollar CAD than you might see elsewhere. So yeah, if it's a strong number, higher than expected, if the core goes up or looks pretty hot, then we're probably going to see the CAD gain. We're only 34 pips away from the 139, so I wouldn't be relying on that too much. I'll be looking at this level down here, the 138, 60, 70 area, which has seen a lot of action, and it's also a historical level as well. So that was the break point. So maybe, Ali, you're trading, obviously, but I would be looking a bit wider for the moves. As for 140, again, we've had two goes above 140, but they couldn't get through this 140.20 area. So that is my bigger level, not the 140. It's the 140.20. It was this pretty much this low here, and then we had the break, and we had a bit of half resistance afterwards. So that, again, is the main level there. Be careful that you get any blow throughs on the data. You want to see them holding. Okay, so if you want a 140 break, it needs to get through 140.20 and hold it. Okay, if we just ping through for 5 minutes, then come back below, situation might be different. But otherwise, if it's a nothing burger, then we're just going to sit in this range and maybe not go anywhere. So take it like that, Mr. Ali. Right, what else can we look at? Well, dollar yen's up and down like a proverbial, I won't say proverbial what. We've had a breakdown through the 50 retracement of this trend here. So we've got, and I mentioned this in the room, we've got trends within trends at the moment. We've got the year's downtrend, which is still valid. We may have come up nearly 1,000 pips, but this downtrend is still valid, and we are or have been breaking this trend, okay, with this move down. Okay, so we're not out of this woods yet, but it doesn't mean we're going to fully break. If we hold here, close above here, this 50 fib, it might give it a bit of impetus to then continue the rally going. But if we're coming under here and holding under here, really, you've only got 2 or 3 lines in the sand. The 61.8 down here, the bigger level is going to be this 142, 141.70. If we're going under there, we have every chance of hitting this low and then maybe taking it out. If we take out that low, then this trend is probably going to continue, and we're probably going to see another big leg lower. Now, this is all over big areas, okay? You're talking 200, 300, 400 pips more to go, but we've already done over 400 pips in the last 6 trading sessions, okay? So we can do that again quite easily and do another 400 or 500 pips and get down to this low. But price action is price action. So for now, what you want to be looking for, where do any rallies find resistance? I mentioned up here into this 60-70 zone is where we might find a bit of resistance coming in on the bounce, and we've pretty much got there. 144.90, 145.10 is going to be the main level. To look like we're turning this around, we need to be back above there. Probably more so 145.50. Otherwise, if we can't get through here, can't get through around here, 144.80, this zone, then maybe we're going to be heading down. 144 is the level you need to be watching at the moment. It's seen plenty of action previously. So if we're going through here, then we've got every chance of heading back down towards here. So trends within trends within trends. What's your thoughts on this one, mate?
Well, yen is strengthening a bit. There's many different reasons, but as I said this morning as well, early doors in the chat room, we were talking about those JGB yields and trade and everything, and the question was what is it telling us? Well, for the yen, I just said it's complicated. I really don't have much in the yen right now, and I know the general feeling in the market and in the community as well is that the yen should over time strengthen. Now we have seen, and as you say, we are in this downtrend, we can say, from 160s and stuff. But I'm really, to me, and any adverse headline can put it back to 147. Just why not? Because it has done so. And as I also said a bit earlier, is that imagine that Ueda has his Corona moment in Canada over the G7. It's probably not going to be. He's probably going to wrap it up in something unscheduled and a one-off. But that could also weigh on the yen. But in the meantime, it's true. I mean, if every other line could be taken as positive, and because even Ishiba, Kato saying that they've already explained a number of times to the G20, G7 what their policies on the yen. They are not manipulating anything. That would have been a small reason for the yen to weaken a bit, actually. But over the past days, it's been rather strengthening a bit. And but again, if we look at yen crosses, for instance, they've not done an awful lot. So that's where I'm really holding off for having too many ideas in the yen. I could have a quick scalp if anything comes out, but I'm really, my view is mixed on the yen right now.
Yeah, very much so. And why is it important to look at these sort of things? Because if you are now a buyer because you think this is going to keep going, this is going to keep going, the fibs tell you that it's not going to keep going because it hasn't kept going. We couldn't get up to the 50 here. So if this is to keep going, these are the levels it needs to break. So if you were a dip buyer, well, now you need to think about it, because very much so this is a rally sell at the moment. So it's these trends, and you don't have to be trying to catch them all and trading them all. But if you're trading intraday and thinking, well, this has been going up for the last few days, I'm going to be on the long side. Well, now the price is telling you, hang on a minute, being long these pairs is not necessarily the way forward, because what you don't want to do is be buying every dip that you get here through this and then getting stopped out all the way down before you realize that the market's changed. That's why I use fibs. The trouble happens when you broke the 38.2 and then we came down and we looking like we were breaking the 50. So just use these trends, okay, just to get an idea of the price action. So it helps you know which way the wind's blowing and which way you're leaning and which way the market's leaning on that. Right, okay, I'm going to bounce it over to you, mate, because I waffled on yesterday.
Yeah, waffle. That's
waffle. You Belgians love a waffle.
Yeah. First of all, Ali, your question, and I'm not even going to look at the chart because it's like a flatlining completely about euro sterling. Well, as a matter of fact, today I finally decided to call it a day on my longer term short, but for now, because I'm waiting for something to tell me that we're going to break out of this 83, 90, 80, 84, 40, 50 zone. But in the meantime, the reason why also I cut it is that just thinking about the potential impact side effects of what Moody's did. If there is a bit of rebalancing into AAA ratings or better ratings, it could be that the euro is benefiting from it a bit more than maybe other currencies, because the Europe is still firmly AAA, and I just want to see what's happening. I don't have a change of heart and go like going long euro sterling, far from, but I just covered it, and I'm waiting for new events. Quick look at the euro today. We had a brief look below that broken trend line, but it's starting to get watered down. So I'm back looking at 112.20, which held, and the top side we have a bit of an intermediate one here, a top early May, a top on the on Monday, and we didn't reach it. So at 112.20, 112.90 is your initial range. Usually what happens when we have I wouldn't qualify it as world shocking news, but when we have like a bit of an event that makes the market think, um, there is there is cases where you have like the first day you have the move. So unless it completely gets reversed on the first day, of course, but a lot of times the second day. So we are today the second day after such an announcement that we had last Friday and a bit of weekend talk and everything. That's where really the market decides what to do with stuff. And so now we are this second day. So I would argue that if it breaks below 112.90, or we 112.20, sorry, or we break above 112.90, that's probably going to cause a few moves to the downside. If you break here, you could have a look back here, perhaps. I was saying mid 111s, 111.65, 75 or so. That would be possible. I'm not saying that we are going like having like 200-300 pips moves, but I'm just bear that in mind, that usually we have like a day of digesting, people taking positions, and then the next day you rather take the real view, or the real money comes out of the woodwork, because they have been crunching all the numbers that if needed, and then they decide to do their business about it. Okay, so I would say like 112.20, 112.90 on the euro dollar. Anything outside, we're bang in the middle right now, is probably going to cause a bit of a move. Don't forget that before this thing was announced, we were actually strengthening a little bit in the dollar. So if people just pick it up again, it could be that we break 112.20, and we could have a bit of a look lower. Just saying, not saying it will happen, but just don't forget what we were doing just before. Okay. Cable, pretty similar kind of thing. We this this broken this broken trend line here, it was left untested. It's around 133.30, which is also the prior high here, because we found support in the mid 133s, 133.40s. But keep an eye on what's happening around 133, call it 2030, okay, 25.30. If we would get back down there, what's happening there? We could have like a bit of a similar picture as I showed on the euro dollar. If it goes down, we could be relatively quickly in the mid 132s again, and then perhaps having a thought about what this trend line is doing right now. Just saying, in case it would happen. If in turn we get back above 134, then we go probably retest the prior highs. One to keep in mind for those who trade sterling, if you have positions, we have the UK CPIs out tomorrow. That could be the clincher for any bigger move. And if you would get like a really sticky picture and the dollar remains in the meantime on the defensive, I think we may have a move finally up into the 135s, and then here's perhaps an interesting one to watch before we can dream about 137s, 130, 135, 85 figure. if you would start to break above that that prior high, which is actually more or less a double top here. Okay, so if we start to break above there, I think we could be pretty quickly up in the 135s towards 136. Gold hopping up and down. It does look like we are trying to find a few ranges, and again it could be like you have a bit of a gap up, and then fresh well, trying to go to fresh latest highs, didn't manage it, coming back down, bounce again, holding up again, and here, and now we are in this 3205 3250 range. I'd say respect it for as long as we don't break above or below. A break above or below, I think is should be good for 30-40 bucks either side. But then once you have done those, or once we will have done those, then we are going to have to think about the wider picture again. We have this pretty thick support line where we bounced off last time as well, which is coming in around 31.30, stretch it down to the prior low 31.20 or so, and then on the top side, obviously, if those $30-40 moves wouldn't be enough, then you're talking about those levels on the top side, and then the 32.90, 33, 10.15 on the top side. For now, I'm not really tempted to do much with it. I am just jobbing it around, and still from the long side, but it's really faster stuff. I'm not keeping anything really in the books right now. Globally speaking, for as long as there's enough uncertainty, the market is buying still setbacks. But as we can see from the pictures here, it's tough to hold prior levels as well. So that's why I'm saying that just respect those ranges, see where we get if we get outside, and then start again, I would say. Looking at the clock, Ryan, I think I've spoken enough today. I'm just going to show one, because this one is getting a bit interesting again. Dollar Swiss, we were talking about is 83.30, 35. We're again on it, okay? But then something new has developed in between, and just around 83.0510, there is some decent support there. And also we have a trend line coming in not far below there. So watch out this zone here, anywhere between 83.10 and 82.85.90, okay, on the dollar Swiss. If that would start to break, then I think that should indicate that risk is not doing too well either. Okay, so keep an eye on that one. And with that, Ryan, back over to you, mate.
Thank you very much, sir. Good stuff as always. Thank you everyone for coming to the Flow Show as you do every day, keeping us on our toes. Have a good one. Have a good trading day, and we will see you all tomorrow. Take care.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.